Hey everyone, and welcome back to Investing Talk Podcast. This week we're going to look at Grab Holdings, ticker symbol GRAB, after their stock took investors on a bit of a roller coaster ride lately. If you're interested at all in global tech, and especially in what's happening in Southeast Asia, well, this is a story you really need to hear.
Yeah, you know what makes Grab so interesting is they're really aiming to be the everything app for Southeast Asia. Kind of a one-stop shop for your everyday needs. Think ride-hailing, food delivery, financial services, even things like grocery shopping and travel bookings all in one app.
Yeah, it's a model that's worked well in other parts of the world, right, like WeChat in China or Uber here in the U.S. But Grab is operating in a region that's incredibly diverse, with different cultures and regulations and levels of development in each country.
Exactly, and that complexity just adds a whole other layer to the challenges and opportunities that Grab is facing. It's not just about scaling up, it's about adapting to a constantly evolving landscape.
Okay, so let's talk about challenges and opportunities. Let's talk about those recent earnings, because they definitely threw a few curveballs at investors. On the one hand, Grab hit profitability for the first time ever, which is huge for a company that's been so focused on growth for so long.
Yeah, it's a major turning point. It shows that they're figuring out how to make their model work financially. Up until now, it's been all about gaining market share and attracting users, really building out that ecosystem. And now the focus can shift towards sustainability and maximizing those profits.
But here's where things get a little bit interesting. Despite that profitability milestone, their revenue guidance for 2025 came in below what analysts were expecting, and that caused the stock price to dip. It's still growth, don't get me wrong, around 19%, but not the hyper growth that some were hoping for.
And this is where I think understanding the context is crucial. Grab isn't a small startup anymore. They're a major player with a huge footprint in Southeast Asia. Maintaining those early stage growth rates simply isn't realistic as a company matures.
It's like the difference between sprinting and running a marathon. You're still moving forward, but the pace is going to change.
Precisely. And for investors, it's about adjusting expectations and understanding what kind of growth is sustainable for the long term.
And then just when the market was trying to digest those earnings, another major piece of news dropped.
Oh, you're talking about the Singapore tax break.
Yeah, literally days before Grab announced their earnings, the government of Singapore unveiled this 50% corporate tax rebate. And Grab is headquartered there, so they stand to benefit significantly from this.
It's a pretty big deal, especially since they just became profitable. Imagine you finally cross that threshold of profitability and suddenly a big chunk of your tax burden is lifted. Talk about good timing.
It's like they leveled up in a video game, right? But of course, it's not all smooth sailing for Grab. They're facing some intense competition, especially from Gota Group, which is another major player in the Southeast Asian market.
Right. It's kind of like the Coke and Pepsi of super apps over there. Constantly vying for that market share and customer loyalty.
And one of the ways this travel plays out is through incentives, right? Discounts, freebies, special promotions, all those things that companies use to try and lure in customers. So imagine you're a customer in Southeast Asia using these apps. What kind of incentive would actually make you choose one app over the other? Free rides, cash back on your food delivery.
It's a question worth thinking about because as Grab and its competitors ramp up their spending on these incentives, it could potentially eat into their margins, even with that tax break. It's a real balancing act between attracting those users and then maintaining profitability.
Okay, so we've covered earnings, that surprising tax break, and the competitive landscape. But what about the technical side of things? What are the charts telling us about GRAB after all this news?
Let's dive into that right after a quick message. When we come back, we'll break down the technical analysis, look at what those moving averages and indicators are suggesting, and try to make sense of it all for investors. Don't go anywhere.
Welcome back to Investing Talk Podcast. It's interesting, when you compare Grab with a company like Uber, especially at this stage, both have that platform model, connecting consumers with services. But the paths to profitability and the challenges they face, I think there are some key differences.
Okay, let's unpack that a bit. What are some of those key differences you're seeing?
Well, for starters, Uber had a very U.S.-centric focus, especially in its early years, whereas Grab really tackled Southeast Asia right from the get-go, and that means navigating a much more fragmented market with diverse cultures and regulations and, different levels of infrastructure development.
Yeah, that makes sense. Southeast Asia isn't this single homogenous market, so Grab has to be a lot more adaptable and localized in its approach. Exactly, and that just adds a layer of complexity to their operations. Think about things like payment systems, language support, even the types of vehicles that are used for ride-hailing. Grab has to tailor its platform to each country's specific needs.
So more operational challenges for Grab, but also potentially a bigger market to tap into in the long run.
Yeah, that's the trade-off. Southeast Asia has this rapidly growing middle class and increasing smartphone penetration. If Grab can successfully navigate those complexities and solidify its position, well, the upside is enormous.
But as we discussed earlier, they're not alone in this race. The competition, especially from GoTo Group, is fierce.
Absolutely. And that brings us to another key difference with Uber. GoTo Group is a really formidable competitor, already established in several key markets where Grab operates. That level of competition wasn't as pronounced for Uber in its early days, at least not on a regional scale.
Okay, so more competition for Grab. What does that mean for investors who are trying to assess the risks and rewards?
Well, it adds another layer of uncertainty, for sure. Grab's success hinges not only on executing its own strategy, but also on outmaneuvering its rivals. It's this constant game of adaptation and innovation.
Sounds like things could get pretty intense. But for those who are looking for growth opportunities, this kind of dynamic market can also be exciting, right?
Absolutely. The Southeast Asian tech scene is incredibly dynamic, full of potential. For investors who are comfortable with a higher risk appetite, companies like Grab offer the possibility of significant returns.
Right, so we've talked about the bull case, we've talked about the bear case, and how Grab compares to other companies. But let's bring it back to the here and now. What are some specific things investors should be watching for the coming months?
Well, keep an eye on their Q1 2025 earnings. Those are due out in May. That'll give us a better sense of whether the slower growth trajectory that they've projected is actually materializing, or if they're able to exceed expectations.
That's a good point. I mean, it's still pretty early days since that 2025 guidance kind of spooked the market. One quarter doesn't make a trend.
Exactly. Also, pay attention to any news or announcements related to Singapore's tax rebate. How is Grab leveraging that to its advantage? Are we seeing a positive impact on their bottom line?
Right. Those tax benefits could be a significant tailwind for them, especially now that they are profitable. It could really give them an edge over their competitors.
And speaking of competition, keep an eye on how that battle for market share is evolving. Are we seeing a ramp up in incentives and promotions? Are any new players emerging?
It's like a real-life business thriller unfolding, except with billions of dollars at stake.
Yeah, it's high stakes for sure. And for investors, I think the key is to stay informed, analyze the data, and make decisions that align with their own risk tolerance and investment goals.
Great advice as always. But before we wrap things up, is there anything else that stood out to you from the news and analysis we've covered? Any final thoughts for our listeners?
One thing that's really worth highlighting is Grab's push into new areas like grocery delivery and AI-driven logistics. I think these are really smart moves. Tapping into trends that are only going to grow in the coming years, they show that Grab isn't content with just being a ride-hailing or food delivery app. They're really aiming to become an indispensable part of that Southeast Asian digital ecosystem.
That's a great point. It's that super app ambition that we talked about early. But the question remains, will they be able to pull it off?
Yeah, only time will tell. But one thing is certain, Grab is at a pivotal moment in its history. Their decisions in the next few months and years are really going to determine whether they become the undisputed king of Southeast Asia or whether competition will eat into their dominance.
All right, so we've covered a lot of ground here. From Grab's recent performance and that unexpected tax break to the competitive landscape and what the charts are telling us.
We've also touched on some crucial things for investors to watch in the coming months, like how Grab leverages its profitability and navigates that increasingly intense competition.
Yeah, it's a fascinating story, and one that's likely to have many more twists and turns. But for now, I think let's shift gears a bit and take a closer look at those technical indicators we mentioned earlier.
Right, because understanding those can give us some clues about where GRIB might be headed in the short term. Remember those moving averages we talked about? Well, even after that recent dip, Grab is still trading comfortably above its 50-day and 200-day moving averages.
Okay, so what exactly does that tell us for listeners who might not be as familiar with technical analysis? Break it down for us.
Well, think of moving averages as trend lines that smooth out the day-to-day fluctuations in a stock's price. They give you a sense of the overall direction the stock is moving in. In Grab's case, being above those key moving averages suggests that the long-term trend is still upward, even with that recent volatility.
Okay, so that's a good sign for investors who are bullish on GRAB, right?
It's certainly a positive indicator, but remember, technical analysis is just one piece of the puzzle. You always want to consider it alongside the company's fundamentals, the overall market conditions, and of course your own risk tolerance.
Absolutely. So besides moving averages, what other technical indicators should investors be paying attention to with GRAB?
Well, one that's often used in conjunction with moving averages is the RSI, which stands for Relative Strength Index. It basically measures the magnitude of recent price changes to evaluate whether a stock is overbought or oversold.
Okay, so kind of like a momentum gate.
Exactly. It helps you identify potential turning points in a stock's price. A high RSI, generally above 70, suggests that the stock might be overbought. And due for a pullback, conversely, a low RSI, typically below 30, indicates the stock might be oversold and poised for a rebound.
So where does GRAB fall on that RSI scale right now?
As of today, GRAB's RSI is hovering around the 50 mark, which is generally considered neutral territory. It suggests that the stock isn't showing any extreme signs of being overbought or oversold.
So not a clear signal either way then.
Not necessarily. Remember, technical indicators are just tools to help you interpret price movements. They don't predict the future, but they can provide some insights into the current market sentiment and potential trading opportunities.
That makes sense. So taking all this into consideration, both the fundamental analysis and the technical indicators, what's the overall investment perspective on GRAB right now? Is it a buy, a sell, or a hold?
Well, as with any investment decision, there's no easy answer. It really depends on your individual circumstances, risk tolerance, and investment goals. Well, let's break down the bull and bear cases a little bit to give you a better understanding of the potential risks and rewards.
Okay, sounds good. Let's start with the optimistic view. What's the bull case for investing in GRAB?
Well, the bull case really rests on a few key pillars. First, their recent achievement of profitability is a major positive. It shows they're transitioning from that growth at all costs phase to a more sustainable business model.
Right, that profitability milestone is a big deal, especially for investors who might have been hesitant about GRAB's long-term prospects.
Exactly. Second, they have a very strong cash position, which gives them a lot of flexibility to invest in new growth opportunities and weather any economic downturns.
And that financial strength is essential in a market as dynamic and competitive as Southeast Asia.
Absolutely. And third, the long-term growth potential in Southeast Asia is undeniable. The region has a burgeoning middle class, rising smartphone penetration, and a rapidly evolving digital economy. GRAB is really well positioned to capitalize on those trends.
So the bull case is basically profitability, financial strength, and massive growth potential. That's a pretty compelling argument, but as you said, there's always another side to the story. What are the bears saying about GRAB?
Well, even with the recent dip, GRB's valuation isn't exactly cheap. Investors are paying a premium for that growth potential, and there's always the risk that it might not materialize as quickly or as strongly as expected.
So valuation is one concern. What else are the bears worried about?
Well, their growth, while still present, is slowing compared to the kind of breakneck pace of 2024, and that's to be expected as a company matures. But it does raise some questions about how sustainable their growth trajectory is in the long run.
And of course, there's that ever-present threat of competition.
Exactly. Go-to Group isn't going anywhere, and other players could emerge. The Southeast Asian market is attracting a lot of attention, and that competition could put pressure on Grab's margins and market share.
Okay, so the bear case boils down to valuation concerns, slowing growth, and intensifying competition. So it's a classic risk-reward scenario, right? Investors have to weigh that potential upside against the potential downsides and decide what level of risk they're comfortable with.
Precisely, and that's where doing your own research and due diligence is really crucial. Don't just rely on headlines or what you hear on podcasts like this one. Dig deeper, analyze the data, and make an informed decision that aligns with your own investment goals.
Great advice as always, but before we wrap up this episode, I'm curious to get your take on something that's been on my mind. We've talked a lot about Grab's core businesses, ride-hailing, food delivering, financial services, but they're also making some interesting moves into new areas, like grocery delivery and AI-powered logistics.
Right, those are key areas to watch because they could be significant growth drivers for Grab in the coming years. Grocery delivery is a massive market that's still in its early stages of development in Southeast Asia.
And it plays right into that super app strategy we talked about earlier, right? Becoming this indispensable part of people's daily lives.
Exactly. And AI-powered logistics is another area with huge potential. Grab has this wealth of data on traffic patterns, consumer demand, delivery routes. They can leverage that data to optimize their logistic operations and potentially even offer those services to other businesses.
So it's like they're building an entirely new layer to their business, one that could be even more profitable than their core offerings.
It's certainly a possibility, but it's also important to remember that these are still relatively new ventures for Grab. There's no guarantee of success, and it will take time for them to scale these businesses and improve their profitability.
So a lot of potential, but also a lot of uncertainty. It seems like the next few years are going to be crucial for Grab as they kind of navigate these new opportunities and fend off the competition.
Absolutely. They're at a crossroads, and the decisions they make now will determine whether they become the undisputed leader in Southeast Asia or get overtaken by their rivals.
Yeah, it's fascinating to see how Crab is evolving, from this scrappy startup to this major player in Southeast Asia's digital economy.
It really is. It's a testament to their adaptability and their ambition. I mean, they've managed to not only survive, but thrive in a market that's constantly changing.
Yeah, but as we've discussed, that market is also getting a lot more competitive, and Grab is facing some tough choices about where to focus their resources.
Right, they have to decide. Do they double down on those core businesses that we've talked about, or do they kind of go all in on those new ventures like grocery delivery and AI logistics? Each path has its own risks and rewards.
It's like they're a fork in the road, and whichever direction they choose is going to have a huge impact on their future.
Exactly. And for investors, it's all about trying to anticipate those moves and assess whether Grab's strategy aligns with their own investment goals.
So to bring it all back to our listeners, what's the key takeaway here? What should they be thinking about if they're considering investing in GRAB?
I think the most important thing is to understand that Grab is a company in transition. They're moving from a phase of hypergrowth to a more mature, profit-driven model.
And that transition comes with its own set of challenges and opportunities.
Right. The growth might not be as explosive as it was in those early days, but the potential for long-term sustainable returns is definitely still there.
But of course, there are also risks to consider, like the intensifying competition and the uncertainty surrounding their new ventures.
Exactly. So for investors, it's really about weighing those risks against the potential rewards and deciding whether GRAB fits into their overall investment strategy.
And as we always say, do your own research. Don't just rely on what you hear on podcasts like this one.
Absolutely. Dig into the company's financials, read those analyst reports, and really try to understand the dynamics of the Southeast Asian market.
Because at the end of the day, investing is about making informed decisions that you feel confident about.
And it's about finding companies that you believe in, that you think have a bright future.
Well said. I think we've given our listeners a lot to think about today. We've covered Grab's recent performance, the competitive landscape, those technical indicators, and even those intriguing new ventures that they're exploring.
It's been a really comprehensive look at a company that's at a pivotal moment.
And we'll definitely be keeping an eye on GRAB in the coming months. See how things unfold.
Me too. It's a fascinating story, and I'm curious to see what the next chapter holds.
All right, that wraps up another episode of Investing Talk Podcast. Thanks to our expert for joining us today and sharing those insights.
It was my pleasure.
And to all our listeners out there, thanks for tuning in. We hope you found this discussion on Grab Holdings informative and helpful. Don't forget to subscribe to our podcast, share with your friends, and leave us a comment with your thoughts. We love hearing from you. Until next time, happy investing.